Today, I'm going to give you a specific entry criteria that you can use to teach you exactly why it works, how to use it, and why you're going to outperform most. If you are doing the same thing that most people are doing, you're likely going to find yourself failing. I hope you're noticing firsthand that what I'm teaching you right now, the specific criteria, is working on every time frame, every market, and happens everywhere all the time. You can notice why what I'm teaching you right now is going to let you build out a system that makes sense for you on the time frames that you want to trade. You're not going to be limited to any one time frame because you're not looking for this weird nonsense of price needing to come back to zones. You're now learning how to study momentum and trend. That's what I want to give to you with this video. Hey, how's it going, guys? Welcome back to MENTFX. Today, I'm going to give you a specific entry criteria that you can use to teach you exactly why it works, how to use it, and why you're going to outperform most, and how to actually study it, utilize it properly so you can be ahead of most people that have taken years in this market, months in this market, by just doing a little bit of work and being ahead of most. One of the things I'm going to lead in with is saying that if you are doing the same thing that most people are doing, you're likely going to find yourself failing. And I'm going to go into what most people do and then why what I'm about to teach you works so well. So today we're going to be talking about the ICI criteria. That's simply the impulse, correction impulse. I'm going to be showing you exactly how to find it and why it works and exactly how to pinpoint it and then actually study it so you can get funded, get better, come join my team and share your community, share your insights, your trades, whatnot, without having to specifically join up for the actual education. I want to give you the education for free so you know exactly what you're getting into. So very simply, this is theoretically the ICI methodology where you simply have an impulse, a correction, and an impulse. Now I'm going to go into this a lot more deeper right now, so let's get into it. First and foremost, where do most people go wrong before we even talk about this methodology? The main place most people go wrong is they learn a new method, a new concept, a new whatever, and they head over to the right-hand side of price and they simply start marking it up. A lot of you, regardless of who you are and whatever method you're coming from, likely have your weeks look a little something like this. So right now, very simply, if you are coming from the normal, so here you go. If you are right now, the person watching this coming from the normal support resistance or whatever, from the normal support resistance / retail-based logic background, no matter how long you spent, if you're coming from this background, the likelihood of this upcoming week is going to look like this for you, especially if you're learning. You're going to go, okay, what do I see, right? Some of you are going to draw in this. Some of you are going to extrapolate that and go like this. Okay, maybe I have that. Maybe it's a little bit higher. Maybe something like that. Okay, looking good. Some of you are going to go ahead and draw a zone that makes sense to you, another zone that makes sense to you, and then another zone that makes sense to you. And then you're going to follow this up by going and, drawing something like this, or drawing something like this, right? And this is potentially what your week might look like. Or some of you are just looking to short it because, most retail is actually looking to force short this because of how thought process works. But this is likely what your week or your incoming weeks looks like, right? Or you're looking for it to, of course, break down, retest, and then go, right? Fantastic. This is what your potential normal support resistance logic is. Now, there's nothing wrong with this. If this is the way that you're approaching the market, you're not doing anything specifically wrong, right? On one hand, if you're looking for the main, ability to keep on shorting something down, you're probably going to be on the wrong side of price because, as you know, I make tons of videos about this and I make tools available to you. So if you head over to mentfx.com, that's a link at the bottom, and go to more and simply go to sentiment viewer, you'll see this right here. And in here, you can tell very easily, especially when it's so one-sided and being confirmed by an intraday, that the likelihood of price is actually to do a specific thing. So if you just follow this with a trade plan of normal support resistance or retail logic, you're already in a good spot. But this is where the first issue actually happens, or vice versa, right? Simply, let me go like this. Let me go bink, add. We'll make this number 1. So you might be that. Or if you're coming from a smart money concept based end, some of you are going, okay, I have my clean imbalance here. I have my zone that I'm going to use here, or some of you are going to use this zone, or some of you are going to use this zone, some of you are going to use this zone. It doesn't really matter because all of it doesn't matter. Some of you are going to go ahead and highlight the fib here and find the 61.8 and be like, okay, this is a very nice zone. I can look for buys there. Some of you are going to be on a higher time frame, right? So this is for the second kind of person. So on the second time frame, on the higher time frame, looking for anything you can find inside of here to short off of, and then price is probably coming into it. Yep, because that makes a lot of sense. And your week is set up, right? You are now looking to short this here, and you're taking losses potentially, or you're looking to take losses, whatever. I don't even know what most people out here are doing. But some of you are looking for something like this. Fantastic. Now, again, let me highlight all these, make that number 2. That's the group 2 of people. There's nothing wrong with either of these approaches. The main wrong things that come with these approaches would be not understanding trend already. So the people that are looking to now short this down, maybe off of a breakdown below this low to clearly create a bearish move. Now we're going to go down. This is one way to be completely on the wrong side. Similarly, if you're not in that group and you're here and you're looking for this, again, you're likely going to find the same kind of thing happen. But that's not even the biggest problem. So the biggest problem doesn't even stem from the fact that you don't understand trends yet, right? And trying to get on the wrong side. The biggest problem stems from the fact that you are not profitable yet, nor do you have data to support your profitability, but you're looking at live price on the right-hand side of price now, waiting for any one of these things to play out. And now, right, this is where you fall behind most people, because for any one of these scenarios to play out, 1, 2, 3, 4, any of these scenarios, for the scenario to actually play out, or any of these scenarios where you get the move down and then up or down and then go and then whatever the fuck you want to look for a move from, no matter what scenario plays out, answer me, at least on this time frame, how long it would take for price to play out that scenario. And a lot of you are going to notice that you would probably have to wait anywhere from 2 days up to a week, so 2 days to a week, to see any one of these scenarios play out. And by the point that the scenario has played out, you have to ask yourself a follow-up question. Have you actually learned anything tangible about your overall system, regardless of what the system is? And is that tangibility something that you can now utilize to be profitable? Go back and listen to that again, but the answer is guaranteed no. Because now, within 5 days, up to a week, you've basically done all the analysis, either on this side or smart money side, whatever you want to call it, and now you have to wait 5 to 7 days to see if it plays out. And by that point, there's new price action, there's new areas to work with, and you've already forgotten the things you've done before, so you're not actually learning anything tangible from the things that you have done. Which is why the first step of actually doing well for yourself is actually going back in time. Yes, back in time, something that I've taught forever, and the reason that most of my members succeed and succeed very, very quickly, because they go ahead and do the stuff that actually matters, is go back in time and find scenarios of the things you are learning within a framework that you can utilize to get involved, that actually begin to deliver, and then go back and study those moments in time so then you can find them in the live markets. If you are someone that no matter what you're learning is approaching the markets by looking at the right-hand side of price and trying to determine what's going to happen, you're going to be waiting anywhere from a day up to a week, months, or years for price action to truly play out. And by that point, there's nothing you can actually learn from the things that you've done, nor in many cases will you even remember what you did. So you'll be just doing the next thing over and over and over again, thereby putting you into a cycle of randomness. This is where you basically don't do anything new any given day. Every single day is kind of the same thing. You just show up, you kind of draw shit on, and you hope this stuff works, and then you feel good when it starts to deliver, and you feel really bad, and you look for a new course, a new mentor, a new Instagram quote, a new source of inspiration, new source of motivation if it goes bad. Right? And then you're like, okay, I'm ready to do this again. And you repeat that thing forever, which is why many of my members continuously excel above those that have spent months up to years doing this thing, because they actually learn the whys about how we think, how we actually collect data, how we maximize experience, how we gain confidence, and then how they can actually start to execute. So that's the first thing. No matter how you're learning, if the things that you're learning, you're trying to apply to the right-hand side of price, which would be live price, you are consistently you're consistently holding yourself back for no reason. Instead, what I recommend you do is you go ahead and look for the things that you are being taught in prior price action, so you can figure out what kind of moves in price create opportunities of success or create opportunities of things that you can take advantage of. And from there, build out an actual data set of what works. So that way, when it comes to showing up to the live price, you can now, with full-on confidence, execute your systems forever, right? And do them when they show up. So that way, when you go and get funded with any firm or get funded with your own capital, there is no question behind what you have to do when you're actually in the live market. Most mentors will teach you how to look at the live-hand side of price and just on the right-hand side of price and just simply draw anything that you see. And no matter what you draw, even if it's correct or wrong, it won't matter, because at the end of it, no matter what you're drawing, you can't utilize because you're not learning anything from the things that you are drawing. So first things first is completely get rid of that shit from your head fully. Secondly, let's establish a framework and then look at examples. So we're going to do something random, like look at GU or something, or UJ. I mean, it doesn't really matter what we look at. I've been talking about UJ for the longest time, but we'll look at one that has nothing on it. And right now, if you made it this far, which I hope you did, we're only 9 minutes in, I'm going to give you a full-on trade plan, a full-on entry criteria that you can use right now to go ahead and literally surpass close to everyone around you, and I'm going to show you why. So the entry criteria is based on the ICI. I'm going to show you what to look for and examples of this in 1 second and how you can perfect your ability to find this and actually execute it. So this is an ICI. It's simply an impulse, any sort of impulse, a correction, and then a next impulse, and you simply will basically look to buy through this high and look to continue this move up. Now I'm going to show you an example and the actual trade plan and actual examples in 1 second. But before we do that, I want to talk about why this works so well. So many ways of thinking, many ways of trading, no matter what they are. If they are smart money, if they are support resistance, if they are trend line, if they are blah, 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 it doesn't matter. Insert anything you want. Order flow, DOM, blah, like just volume, I don't care. Most ways of trading, almost every single one of them, rely on price either coming back to or trading back to a zone so you can get involved. This way of trading oftentimes does not work because by the time you are established within a trend, the odds of you getting a proper limit-based entry, so that's when price comes back to an area to trade off of, becomes significantly lower, which means those people that truly understand trends or get really good at understanding trends don't have a way to actually get involved because by that point, they can't get involved. And the people that don't understand trends are the people that are forcing the opposite side because the opposite side will always come back to price. So let me show you what that means. If price is doing something like this, right? So price has gone back and forth a little bit. It's come back into zones, right? It may be coming into zones here. Maybe it does it again right here. This is usually the blueprint that I call of how price moves. Oh wait, let me move this over so you guys can see it because I'm in front of it, right? So let me just delete these. There we go. Okay, I'm not in front of it anymore. So here's your SSCs, right? Price is coming back to zones, and then maybe starts a run, right? And maybe starts, running up, okay? Something like this. This is how oftentimes prices move, like so. Especially when you're looking at trends, how they deliver, all this fun stuff. Now, what's interesting about this moment now, right, is what you'll notice is the moves that actually come back to the fib levels or to SNDs or to demand zones or to any one of these break and retest zones, right? Maybe like this one right here, whatever you want to call it. The only ones that happen and start doing that are usually the ones in what I like to call in the stage 1, in the weak to strong hand transfer of price. So unless you've got in position here, you're likely not in the trade, which means that when the true trend begins to deliver, and this will happen to every asset class over and over and over again across all asset pairs and all markets, because markets are cyclical and this is how they move. By the time you're in this actual move now, what's going to happen is the people that truly understand trends, right, and now they know that the market is long, are not able to get involved because price is not coming back to the zones that they want to see price come back to, as you can see. So at least they're on the right-hand side of price, but they can't actually trade it. So that's one problem. But the other problem is the people that don't understand this and are consistently thinking that there's a pattern to go short. So what's happening is at every single one of these move downs, right? Move downs or from prior price action on the left, right? So either at every one of these move downs, which on a lower time frame is going to look like what? It's going to look like this, where there's a breakdown. Every single person that doesn't understand trends, because they just think trends easily fail and just reset, they're already looking to go short here and here. This is what forms, as I taught in my last few videos, the clouds of liquidity. These are the people that get liquidated, but these are also the people that are going short here, going short, 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 right? They're all trying to get short in this move because they expect a potential move off here. And notice what happens in this case. It's hitting a zone. They want to see price get back to a zone so they can sell it or buy it. And in this case, well, every time you try to go short at any of these peaks, what is price doing theoretically? It's coming back to the zone, but it's flushing through it. It comes back to the zone, but it smashes through it. It comes back to the zone, but it smashes through it. It comes back to the zone, smashes through it. So hopefully if you've been doing this for a while, you're seeing firsthand why you've been failing a lot of the time, right? So what you need to understand is that when a trend is prevalent on any given time frame, the odds of pulling all the way back into a zone that you can easily predict becomes significantly lower, which means if your trading system is based on zone prediction, you're going to do very poorly for yourself unless you build out a potential edge that might work on a 1 minute or a sub 1 minute time frame. So this is why you'll see a lot of mentors, especially in the smart money space, teach on a 1 minute, 30 second, 15 second, 5 second, because at least on those time frames, you have so many moves that happen all the time that you can maybe get away with it, but at the same time, you don't understand how trends work. So that means that when you try to scale in any way, or if you try to look for long-term profitability, you you don't find it often, right? So coupled together, a system that doesn't understand trends and someone that is looking at the right-hand side of price to predict where price is going, you have someone that's never going to progress. So what we can do is we can start off by dealing with those two issues to make sure you never make that issue. You never make that, you never have that issue, that problem, okay? So the first place we're gonna start, we're gonna actually fix both of those things in this video today. The first thing we wanna start with is understanding, right, first of all, that we don't want to, that trends move in this way where they don't always come back to zones. And if you think they do, or you think your entries are gonna be off those areas, you're consistently going to find yourself on the wrong side. Great. So what is one way that we can now disconnect from that? Well, I'm going to give you a framework of an actual entry criteria that you can use to actually get involved on a market that is clearly trending to you. Now, the way that you define clear trends are going to be different from person to person. If you're in my mentorship or you're learning from me, you know that I define that through using higher time frame SSCs by telling where price is heading or where it's been and how it's been moving there. And then inside of this, you have S&D 2.0s, which is very simply when down candles that trade upwards create new down candles that trade upwards, and then from there you can use those to keep going long, and it's creating a chain of demand, as we like to call it. And I'll teach you guys more about this later. But simply, you have a way to define that the overall market is moving in one direction, okay? And another way to do that is this free tool that I made available. So if you go to mentfx.com, go to sentiment viewer, you can see that UJ for the longest time ever has been at 90% long. If I show you guys something very quickly, this tool has been around 90%, 80% long ever since price has reached into this area and this area here. Ever since price has reached these areas here, the UJ on my tool that I made available to the team has shown extreme longs on this. And since then, we've also been extremely long to look for price to reach this high, and we're still long on this thing. And I've been long showing up to these YouTube videos, to this channel over and over again, telling you where I expect price to go, where I expect price to go, and how I expect price to deliver, and why most people, again, are going to be wrong. Because again, remember what I said a second ago, the people that don't understand how trends work are doing what? They're looking to sell the areas here, the areas here, the areas here, in anticipation that finally we're ready, finally we're ready, finally we're ready. But the reality is that because of how trends work, it's likely going to smack all of them, thereby creating what we like to call the cloud of liquidity here. The same thing happened back here. And I've countless videos about this in my private mentorship for the last 2 years. We've had videos where we discussed this exact move happening here for that exact same reason. And the cloud of liquidity basically existed all over here because of the people that would be looking at all of these areas here to once again go short. And that's how they get ran. That's how liquidity delivers. That's how liquidity is truly engineered, okay? So first things first is having a framework for an actual market direction. We have that now. Now remember what I said. Oftentimes, in the beginning stages, a stage one of a market that's going to now deliver, you'll get actual SSCs. You'll get zones that come back to either fib retracements. You'll get zones that come back to inefficiencies, imbalances, to demand zones, to create new demand zones, to create new demand zones, to trade off demand zones. This is fine. If you're a trader that's able to get to catch the move initially from the stage one, as it enters stage two and begins to move, then you're in a good spot and you're okay. You're going to be able to secure your profits, all that fun stuff, and then you can take that, right? But if you're not, and now you're in a stage two, you need a criteria or a way to enter that's going to allow you to be on one side of price. Now, again, why am I using UJ as an example here? Because the sentiment viewer has been bullish on this thing forever, and I made this available to you guys on this public channel, so it's a real life example of the things that I've been trading, I've been following, my team has been following, so you know exactly that, you know, this was done by all of us. What is the entry criteria that's so special now? And also, before we do that, why is the ICI so powerful? Well, like I just said, once you understand that prices don't exist in a way that they always come back to zones, or they don't make higher highs and higher lows like this, but they more so move in a way that's more akin to something like this, right? And then starts another move, whatever, right? This is what prices often tend to move like. And if you notice, if you're trying to trade any retrace, you might get a trade here, retrace, nothing, right? Retrace, maybe retrace, etc. You're not getting any trades, right? Because none of the zones are being hit. And unless you randomly predicted that some inefficiency here or some random area here was worth using, right? Because there's inefficiencies here and here. If you somehow predicted randomly this is the zone, then maybe you might pick a perfect zone, you get away with it. But for me personally, I don't want to find something that's based in this subjective, not easy way to follow or look for something to happen, right? Or try to predict random zones that price is going to get to. So instead, we need something else, because we need to realize that already, because we've defined this, a trend, right? When it's moving, it doesn't come back to zone. So how do we fix that? Well, we fix that by understanding one of our criteria that I teach, which is an impulse correction impulse, which happens everywhere, okay? And I'm going to show you how to find that with a specific criteria model that we're teaching today, right now, okay? For free, guys, okay? So very simply, what you want to look for is this model in this form. Oftentimes what you want to see is in a market that's already been established bullish. So it's already moving bullish, it's great, right? Anywhere, this can happen anywhere. So it's moving bullish. What you want to see is you want to see some kind of big down move, okay? You want to see a big down move that kind of flushes out some of the, just a down move. Doesn't matter to where. It can be to any zone. Doesn't matter where the zone is. It could be all the way here too. Well, you'll see examples. So let's say there's a down move. Boom, there's a down move, okay? Then what you want to see is you want to see a small up move, followed by a sideways action, followed by a continuation. This is it, okay? So very simply, your actual model, let's even draw this a little bit higher. So it follows what we're saying. We're like, if you have a zone here, it doesn't get there. If a zone here, it doesn't get there. You know, if you have an imbalance here, great, it got there, but you have no idea to predict that. So this is the perfection model. To actually show you the model on its own, this is the model right here. The actual model itself looks like this, okay? You want to see a big move, okay? For the bullish side, to take a bullish trade, a move down, an ICI. Simple. Now, here's why this works. So the simple impulse correction impulse is happening on a bigger time frame right here. You have an impulse, and this is now a correction inside of it, and you're anticipating that the next impulse is going to happen down through the top and keep going. So that's that ICI occurring. Inside of it, at the same time, this is what you're trading. This model itself is an ICI. So it's an inside model where you're looking to buy stop the next high, protect, in this scenario, it's up to you, but you can protect the entire swing or your own choice of risk inside of it and look to take it long. This is how you create a very, very powerful system. And notice how this system or this entry isn't based on price coming back to a random zone or price coming back to a zone, making a hit off the zone, and then you get a buy. No, it's based specifically off understanding how if a trend is in motion, the buy stop and the entry into the trend is going to give you the best likelihood of follow through, because guess what? When prices are trending or moving in a one direction, your best form of action is to get involved using something like that. So for instance, that would be met somewhere in here, right? This would be the entry in here to take it long. I'm going to show you examples too in a second. This is a phenomenal entry, right? You have price that has made, and this can happen multiple times. So you have price that made a big move, comes down, makes the ICI to take it long. And then inside of it, you have a right here. Let me go and do that on a different color. Inside of it, you have a move up. That's this initial move up here. There it is. That's the move up. Move back down. Here's this move down. A small move up. Here's this move up. Sideways action. Sideways action, even if it comes down big time. And then the buy stop through the next high to take it long. Now what you're doing is you're changing your frame of focus from price always needing to come back to a zone, to a Fibonacci level, all this stuff, and you're framing it into, I'm going to get into the continuation burst. I'm going to get into the continuation of price over and over and over again, okay? So I want you to remember this. For a market that has established its direction, and again, I teach you the tools to establish directions, understand when price is ready to go. This is done through accumulation models, reaccumulation models, distribution, redistribution, not the Wyckoff form, but the way that I teach at the MENTFX channel and the mentorship. And you can go and use that. But nonetheless, this is the overall ICI method that you want to use. In the scenario of a bullish market where you're looking for bullish trades, you want to see this, small move up, see, and you want to look for the continuation, and you're looking to make money off of this move right here. That's one, very powerful because of the fact that you're entering an ICI, which is already powerful in itself. But two, as you might notice this, because most traders will see this as a breakdown. And once again, as you should all understand now, that's going to build a cloud of liquidity through here, because that's the moments where most traders are looking to short the supply zones in here, the supply zones here, the supply zones here, the break and retest, the high here, the double top, whatever it might be. That's what you're longing into. You're longing into that truly engineered liquidity. And this happens on every single time frame, on every single pair. It's just a question of, is there a trend or a market environment that supports the fact that this is happening? That's the question you want to ask yourself. So take note of this, take a picture of it, write it down. This is it. The overall system looks like this. Long, comes down, ICI. That's what you're looking for. You're looking to buy stop here. Now it's going to take a while because you're going to have to record the data, get used to it, see how it works, understand your RRs, your risk, all this stuff, because there are different ways to manage and all that fun stuff that comes with it. But that's not what this video is about. It's about giving you an actual tool to get involved with trends so you start understanding how to do better than all the people around you that are doing like shit. So we fixed one thing. we had two issues that we wanted to discuss. One issue was this idea that you need a price to come back and we don't have a criteria that's going to let us get involved in trends. We have fixed that now. And we're going to look at that example in a second by talking about number two. And the number two problem is that no matter who you are, even if you have a good system, the people that are on the right-hand side of price trying to predict the next zones, trying to draw everything, trying to make their sigma flip zones, trying to make everything, like trying to predict where price is going to go, right? Because a lot of you are in the boat where you're doing this. You're going, okay, we have a zone up here. Price is going to hit the zone. Here I go, price is going to hit my zone. Now it's hitting the zone. It's going to come down to the imbalance, fill the imbalance, come up, do a chalky flippy here, give me an entry off of this zone, come down, take the equal lows out, play around a little bit, come down into the imbalance here, come into here, give me a chalky flippy right here. It's going to go, and I'm going to get a long. It's going to come up to hit this imbalance, and you're like, you think you're a rocket scientist. You're trying to predict every move that's about to happen, even though that's not how markets move. Markets don't move on you just predicting every single move and then just, oh, here I fucking go. It actually is the other side of that, where you're just here waiting for the big fish to come in, the big money to come in, and then you simply follow along. And that's what I'm teaching you to do through this criteria. So number one has solved the issue of a trend, and number two is solving the issue of the people that are on the right-hand side of price, and even if they're correct about price or whatever they're looking for, they never learn because they're on the right-hand side of price. So this is where you fix that issue by going into prior price on the time frame of your choice and find the criteria that have been met, especially within the entry criteria that I'm teaching you today, that can give you entries. Let's do that. So for instance, and it's going to take you time to perfect this and see this, this is an example, okay, of that criteria being met, okay? I'm going to show you an easier example to follow at the moment, okay? Here's an example of this criteria being met, where you simply have price makes a move, okay? Price comes down, price then moves upwards, and without taking out the high, it makes an I, C, and you simply can draw a high like across the top that's created off that impulse. So there's an impulse inside of it, and you simply then buy stop through the high, like so, and you can protect, this is where you're going to have a little bit of trader preference, you can protect the low of the candle, or the entire swing. That's fully up to you. You're going to learn over time, and this happens on all time frames, guys, all time frames. You're going to learn over time what works for you, but that's an example of that criteria being met. There's another example of that criteria right after it, okay? Because remember, what we're looking for, remember this, impulse, a correction that just comes down, a small impulse, sideways move, go. That's what you're looking for, okay? It can come in many shapes and forms, which is why it's going to take you time to do this. But notice how by going to the left-hand side of price and following and finding examples of where it happened, we're already getting rid of this number two problem that most people have, where again, they go to the right-hand side of price, they try to predict stuff, and no matter what happens, even if they're correct, they never learn or make money or go on to make money or progress to make money or get funded because they don't actually have data in their mind to lean back on. You have another example of it here. You have an impulse that is made, price pulls back, okay? Price then makes an impulse, creates an intermittent short-term high, and through there, if you buy stop again, protecting either the overall swing or just the candle, that's fully up to you, you then have the continuation move. Now, again, same thing. It happens right here, okay? You have an impulse. Again, notice how the impulse can come from anywhere. A correction, okay? Price makes an impulse. It's under this high still, goes sideways, and once again, you have a buy stop. And based on how you protect, you might get taken out here, or you might get the move, okay? Let's look at some more. Here you have a correction. Here you have an impulse, and this can be from any impulse. Notice this, okay? Here you have an impulse, clearly on a market that's bullish and has been proving bullish, okay? A correction, price makes an impulse, go over the high, buy stop it, and again, if you protect the overall swing, you might get a move. If you protect the candle, you don't get a move. That's fine. It's part of the game. There's no problem with that. Let's try to find another example for you guys, okay? Specific example. I'm just looking like for any examples right now, but yeah, like this one's okay. It still meets the criteria. You have an impulse, okay? Price pulls back, makes an impulse, gets a high, and then you can see in this case it never trades above it. Goes a little bit lower. Impulse, correction, impulse through the high. Protect the candle if you want, or protect the swing, or protect somewhere in the middle. Again, over time, you're going to learn for yourself what management you're going to use, but these are all opportunities. On a fractal or on a bigger time frame, you have this as a big impulse. Price corrects big time, makes an impulse, correction, Again, this is an opportunity. You buy stop through the high. You can protect the low, a bigger low, halfway, or the entire swing. It's fully up to you. And then you get your delivery. So now what you're learning is you're learning how to get involved with price rather than against it, with a continuous expectation that price is going to come back to random zones. And now instead, you are seeing firsthand for yourself where it's happening, so you can go back and find the criteria that ended up occurring for you to get those actual moves, okay? And again, this happens everywhere. So again, like here, you have, again, the same thing. You have an impulse, a correction, a move, go sideways, you get a long, and then if you protect the swing, you get that trade, right? So this is, again, same thing. Again, it's going to take time for you to train your eyes to see this, but once you understand it, you are going to be unstoppable. So remember this: impulse, correction, impulse, correction, impulse. This is where you enter. How does it look on price? Impulse, correction, impulse, correction, impulse. And you're looking to enter here, because you understand how prices move. And notice how they don't have to come into any zone. It can be off of just an up move, because now you're learning how to be part of a trend. If you have established the actual trend, and again, my point, what I do through my mentorship and stuff is I teach you how to establish trends and understand context, understand when to trade, when not to trade, what is strong, what is not, where can you get involved. Then all you have to do is apply a criteria that is now going to be pro the way you think. So again, this is the same thing. You have an impulse, right? So redraw it, like draw it. Impulse, correction, impulse, correction, and then we're looking for that impulse. That's what this criteria is based off, right? Does it look the same? Yep, it's the same thing, right? Impulse, correction, impulse. That's what we're looking for. So if you entered that, if you protected the swing low, then great, you're in that trade and it's going now. If you protected just the low, great, you took a loss. There's nothing wrong with that. Losses are the only way you make money in these markets. Let me show you very quickly what my personal September and August so far look like together. Okay, it's gonna look a little shit. I don't know why it does this with my... Oh, it looks like, okay, it looks okay. So this is just my August and my September. About 47 trades, 50 trades, 25 wins, 15 losses, 7 break even. So management's a big key, but you can see it's been beautiful. It literally looks like UJ itself, right? And then we have my actual trades here. And again, I'm working on some of my management. I'm gonna try and make my management better, but it's been a beautiful, beautiful month, risking 0.75%. Beautiful last 2 months. And it's simply using this criteria right here. Or actually, this is actually a more refined criteria of it. So let's say you did that, you took a -1, all good. Just remember that. Notice how everything we're doing right now has already surpassed most people that have spent months doing this. This is what I need you to remember. The fact that you just sat here in this video for 30 minutes so far and looked at me show you some examples of actual criteria that works in regards to giving you entries, which is this right here. This is the ICI refined, basically, the MENTFX style, MENTFX entry. The fact that you sat here for 30 minutes and saw this has already made you better than most people that have spent months, learning about Forex or learning about trading, and in some cases, even people that have spent years. Because the people that have spent months have still been on the right-hand side of price, maybe looking at daily zones, trying to predict where it's going to go, but they haven't learned anything. You've already learned how to use a framework of understanding overall bullishness. Hopefully in my other videos, you've understood why we've been bullish, and I've been making this available over and over again. And now you have a way to get involved, the criteria for getting involved that actually supports continuations and doesn't focus on needing to get a pullback, okay? So let's see if there's more examples of this, and you're going to get much better at this. But even inside of here, I think I said there was another example. So where was the example I just showed where there was like a loss? It was right here, right? So you have this impulse, yeah, correction, impulse, sideways, and then you buy. And then again, if you protect the low, you're good. If you don't, you take a loss. Fantastic. But look what you have inside of it again, okay? You again have this big impulse. You have this big correction. Then it makes an impulse, corrects across the top. So again, you can buy stop through that correction, right? Protecting the swing low, protecting the overall swing, or protecting the candle. That's fully up to you. It does not matter. And then manage in accordance with your actual system. Fantastic. Is there another one? Yes, these happen everywhere. I corrects, makes a move, goes sideways, corrects even further, fine, comes down, corrects, goes across. You can buy stop this. Again, if you protect the candle, different management styles, all is good. If you protect the actual swing, well, in this case, you get a starter move, goes to 1-1, then fails. That's all good. This is why you do this. You go and you do this for 100, 500 trades. You take photos of it. You have now outdone most people. This is what I teach people in mentorship to do. So what I want you to do is I want you to take this criteria, go study it on any time frame of any market. Okay, in this case, actually do UJ. Go to the sentiment viewer that I have made available, mentfx.com. It's free. Okay, you don't have to join up, but you can join up. Go ahead and find a very one-sided market and go ahead and just use without any other tools, okay, without any of the other tools I teach. Because again, when do you know when not to enter? right? Why do I not have entries on all of those areas I just showed you, right? Let me show you my actual UJ. Right? I have entries in some areas, but why do I not have entries in every single area that does this? Well, that's what comes down to context. It's coming down to structure, understanding when you want to use it, understanding buildup of SNDs or 2.0s, or where it makes sense, or where is the model, what is the model that's undergoing. That's what I try to teach. So again, even without that, just follow what I've given you today, which is this criteria of entry. Okay. Just follow that with the understanding that you're buy stopping the next high, like so, buy stopping the next high, protecting the swing or the candle that breaks out. So in this case, I mean, it's hard to see here, but, or the candle that breaks out, and then just take photos of it. Try to get used to seeing how the market sets up with this specific criteria on all time frames. Notice how you're not going to be limited to any one time frame. Now let's go to a 4 hour. Does it do the same thing? I've been bullish on this thing, like I said, since right here with my team. So since then, you can go and find any criteria that meets what I just showed you. Let's see if we have any of that, okay? This is why you do what I teach you. You have an impulse, right? A big move down, then you have an impulse, correction, and if you buy stop through the high, right? If you protect, again, the low, you take a loss. That's fine, -1. It's part of the game. Or you protect the swing. That's what I just taught you. And you take that up. Or you protect the intermediary swing and you take a loss. Fantastic. Let's see if there's another example within here, because this is still part of the same example. Big impulse, big correction, right? This is now an impulse, correction across the top. This is in itself a trade. You can protect under the low of the candle, higher, or the entire swing. Those are all trade opportunities. You can notice why what I'm teaching you right now is going to let you build out a system that makes sense for you on the timeframes that you want to trade. You're not going to be limited to any one time frame because you're not looking for this weird nonsense of price needing to come back to zones. You're now learning how to study momentum and trend. That's what I want to give to you with this video, okay? Let's look at more examples, if there are. Let's take a look. Look what happens here. Impulse, okay? Correction. And then inside of it, this can be viewed as an entire correction. You have impulse, correction. Now again, is this happening within the prior leg? Yes, right? Because what did I teach you we want to look for? We want to see the impulse, correction, a move, go, right? We want to see it happen here or around this area or above, right? As long as it's below here or very close to it, because we know this is a cloud of liquidity, of dumb money that wants to sell. That's what you're buying into, and that's what explodes price. So again, ICI, you enter through the correction, you protect the candle, based on what your management style is, the overall swing or the overall swing, if you're maybe a bigger position or a swing trader, and this could be your trade, which can be still fine, nothing wrong with that, but you're going to assess for yourself what makes sense for you, right? So again, you're going to do that. Again, is there more examples? Yeah, there's more in here. There's another example right here, right after it. You can take a buy through here or here. All of those happened below that high, and all of them gave you opportunities based on how you risked that either delivered or delivered in a huge way. Let's look if we can find some more with the same model. Impulse, corrects down, right? Makes an impulse high, but again, impulse high doesn't do anything. So you wait. So again, impulse, correction, impulse high. You can buy stop through that high. Protect the low, the entire one if you want, the swing one if you want, or the candle based on what you want to do. Or what do you notice? Well, this in itself is an impulse, the correction inside of it, impulse, and you can be buy stopping inside of this area too. These are all valid versions of this trade. I hope you're noticing firsthand that what I'm teaching you right now, the specific criteria, is working on every time frame, every market, okay? And happens everywhere all the time. It happens a lot of the time, which means that you have a system now or criteria that can actually get you into moves without you ever needing to FOMO. That is a huge thing. If you can have a criteria that literally destroys FOMO because it happens a lot, and then on top of that, you can put on the goodies, which is, am I actually willing to take risk on this? It's going to make everything easy for you, because now you're not sitting there going, oh my God, I missed the stage 1 SSC or SND that's now going to deliver the move. Now you know you can get involved in any moment here. When I've made videos on UJ, you now know when this explodes through the highs, you now know you can get involved in any moments here on 1 hour and 4 hour charts based on the daily, because now you know what you're looking for. You know that when this price begins to explode, which it has, and then it continues to explode, which it has, and then hopefully, as I'm looking for, continues to explode through the next highs, either explodes now or comes down a little bit and then explodes. Position in a way that allows you to make the most out of what you're doing, right? And then notice what happens after that even. envision that you look at this as a ICI. It's the same thing. You buy stop through the high, you protect the candle low based on what you want, or the swing, or the overall swing. Again, this is going to depend on your way of thinking. This is already a 100 pip stop. I'm sure a lot of you can risk whatever you wanted on this 100 pip stop based on risk, and then now you're actually doing something that you can do across all time frames. And once again, you're now in delivery, and that didn't require price to come back on you, because as I'm teaching you today, if you are trading with a system that is basically giving you something that gets you involved in any price action to the direction you're looking for, you're always going to be better off, because now you are supporting and following the underlying trend, and you understand how true liquidity is built up. This is why when I made the video back here, I told you most people would be shorting right here, and that creates a new cloud of liquidity, which is even better with this cloud of liquidity, because we're going to see that high get ran, very likely, right? That's what I'm looking for. So fantastic, right? That is the criteria. Now, again, as you get lower, you're going to see this on everything, even the 1 minute. Even today, you probably had this happen, right? Like on the 1 minute, look what happened today. You have an impulse, right? A big correction, a move, C, I, right? If you buy stop through the high that forms here and you throw your stop under the candle low, you'll die. This candle low, you're fine. Under the swing or the big swing, that can be a trade that you're now in, and that could be your day. Or maybe you don't like this setup specifically, right? So this is the impulse, correction, impulse, correction. You can also look for the inside versions of that. So then you have this. You have this impulse, correction. You can take this buy stop, or this one, or this one, or this one. All of those were valid due to the fact that they were at or just below this high, because we know what is forming here. We have endless people, endless amounts of traders, because of the inability to understand true trend following, because the inability to truly just simply understand that, once a trend is prevalent, it will remain prevalent until it fails, right? That are going to look to short this market no matter what. And at these points, those are the people that are looking for lows to short to, imbalances to short to, all of that fun stuff, and they get taken out. And I've now taught you how to prevent that just by looking at a specific entry criteria that is to do with the ICI. And this is going to happen absolutely everywhere. In a market that has established itself a little bit bullish and begins to deliver bullish, you again have impulse, a big correction, which is what you want to look for, right? I taught you, I wanted an impulse, a correction, an impulse, correction, impulse. That's what you're looking for. And you're entering off of this ICI in anticipation of this higher time frame ICI. That is what's giving you the huge skewed risk to reward on your side, and within the concepts of everything that I've taught forever in regards to the clouds of liquidity. So you have a big move, a huge move down, right? Within the prospect of a big move, which is already bullish. Look what you have. Impulse, correction, impulse. If you buy stop through the next high, right? You protect the low of the candle, you are free sailing. You protect the swing, you're free sailing. If you protect the swing, you're free sailing based on the RRs you look for. Phenomenal. Look what happens over and over and over again. You have an impulse, a huge correction, an impulse, correction, impulse, an impulse, correction, impulse, an impulse, correction, impulse. As a trader, now you literally have all these opportunities available to you, and now it's up to you to choose which ones not to take, because now you're not stuck sitting there trying to trade every single fucking zone because it's the last chance you have on any trade. And now, because it's happening everywhere, you need to create rules. You need to create contextual rules. You need to create sentiment-based rules or tool-based rules to actually stay out of price. Because once you've made the case to go in, I mean, you have all these opportunities to you. And in this case, they all worked. That's phenomenal. But now you understand that you can stay out for a reason of maybe a candle not looking the way you want it to look. Or maybe you want to get in here because you like it when it's a small correction like this, and you can simply protect the low and look to take it long. And even a small move like this can deliver you 7R. And again, this is how, if you wanted to trade the lower time frames, you should be trading the lower time frames. You should be trading them within the trend, the overall momentum, and then having a way to enter where it doesn't require you to have price come to a random inside demand zone or a random imbalance that you found. And now you're not sitting there randomly worrying about random zones being hit. You're now sitting there waiting to just get in with the money as it enters. And now you have a power that close to every other person around you, especially if they've even spent months doing this, doesn't have. And you also now have a power that will outdo most of these Instagrammers that you might look up to at the moment, but soon you'll realize what they're doing isn't actually a way to actually follow price. Recognize how trends and momentum work, use a strategy that gets you involved with trend and momentum, and you're going to make yourself unstoppable. Now, what I want you to do is I want you to now write this down, study it, ICI, right? Because you're looking for the ICI of the higher time frame by looking at that impulse, and then look and enter on the inside, right? ICI. and you enter like so. I want you to go and get used to this. I want you to get used to seeing this and getting used to seeing all the opportunities available to you. Then what I want you to do is I want you to take photos. I want you to take at least 30 to 50 photos at least. Then, and only after that, because that's going to show me that you're a little bit committed, go do this on UJ on any time frame that you see fit. Find good examples of good trades that ran. Take 30 photos or so. Then go to mentfx.com, join up with the mentorship, and from there, please head over, say hi to the team in the trade talk, whatever. And then in team thoughts, at least maybe right now we'll do this in team thoughts, post your PDF or some of your photos. Tell me what you've learned. And from there, we're going to start an actual journey of real understanding. And hopefully this doesn't show too much. I don't want it to show the links because this is all private here. Oh shit, it shows the introduction here, but that's fine. Come down to mastery, watch the introduction, then watch wiring and S&D. You're gonna go fucking tenfold above everyone else, okay? I hope you guys enjoyed this video. This is my criteria of the ICI and how I follow prices and how I follow trend and momentum. Good luck. Thank you for watching.